Yo, what's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we got to talk about the Paysafe stock. It has been getting wrecked lately. I wanted to jump on and give you my thoughts on where I see it going. I will also give you my Paysafe stock price prediction for the end of 2021. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the top pinned comment for my Patreon account. Come over and join the family. We've got an awesome community over there, and there's a few spots left down on the lower tier. You'll get access to the private Discord where we talk stocks. You'll get links to 5 portfolios so you can see exactly what I invest into. And then I send out anytime I buy or sell a stock, the second I do it, so you can follow along. But I actually think the most value comes from the swing trade setups that I send out. So like anytime I map a chart or I've got a watch list or I'm breaking down fundamentals, I send that out so you know what I'm watching and what I'm getting ready to buy. There's also a ton of education over there, a lot of books, ebooks, graphs that you can take and really learn to take your investing to the next level. So if that's something you're interested in, come over and join us. We'd love to have you. Day One Squad, I love you guys. Thank you for your support. It means the world to me. But guys, let's get started. Today, we got to talk about Paysafe. I mean, this stock's been getting beat down lately, just like a lot of the other SPACs have been. For those of you guys that are new to the channel, Paysafe's one of my favorite stocks. I've been investing in it since it was early SPAC days. What's funny is, guys, I bought it at like $13 or $14, and I liked it at 14. So I love it at $8.24. But guys, this whole earnings season has been really brutal for growth stocks, especially. Anytime these stocks show the slightest bit of weakness, they just get wrecked, down 20% in pre-market. In today's video, I want to kind of give you my thoughts on the overall market, where I kind of see it going, and then I want to break down the earnings report that Paysafe had, kind of show you why everybody's freaking out, and selling the stock, and then give you an idea of what I'm doing and where I see it going, and then I'll give you my Paysafe stock price prediction for the end of 2021. So first thing I want to talk about is the overall market. Real quick, guys, for the last couple of months, really all of 2021, we've seen this just constant rotation from growth stocks into value. It's pretty much driven by interest rates. So when interest rates are down, you'll see the rotation into the NASDAQ, tech stocks, growth stocks, right? And the banking, cyclical, and value stocks sell off. Interest rates go up, and the vice versa happens, where NASDAQ, tech, and growth sell off, and banking, cyclical, defense stocks, they go up. Over the last couple of weeks, guys, I've really kind of seen that rotation, constant rotation, start to fizzle out. It's starting to slow down, and the weaker areas of the market are getting weaker. You got to realize, guys, we went through one of the most, probably historically, the most insane SPAC, whatever you want to call it, craze, where there was multiple new SPACs coming out every day. It didn't matter what they did. They could, sell dog food, and they would run to all-time highs within 2 weeks. Then the SEC crackdown, right? And for the last 8 months, really, last 6 months, we've been in just a solid consolidation and sell-off within SPACs and growth stocks, but mainly small caps and SPACs. Guys, the market is being held up. It's being propped up right now by a few of the big guys, right? Microsoft, the big market drivers. And the other areas of the market, the weaker areas, aren't really helping it as much, but they're still breaking into all-time highs. The S&P 500 hasn't had a 5% pullback since November. So I think that's imminent, right? I think that there's a good chance that the large caps, the market movers, could continue to hold up, but they've got to cool off eventually. And I think that the SPACs, especially, guys, they're down at those levels where there's not much more downside. And I'm not, so that doesn't mean that they're going to go right back up, but I just don't see them being pushed that much further down. And I think that we're going to see one kind of final rotation, because a lot of the negative, the bad news, the FUD is already being priced in my opinion. And I think as time goes on, we get closer to the end of the year, we'll start to see some of that bad news not create such a big reaction in the market on the lower cap, SPACs and growth stocks. And I think you'll see that final rotation into risk on. Because as inflation goes up and as, people are worried about their money depreciating, they need to get into stocks that, can give them higher percentage returns than the traditional, value stocks. So I do see that coming, guys. So these SPACs selling off is not that big of a deal for me. I mean, we're down at May, April, and March levels again. So it is pretty, brutal to see these stocks continue to get, beat down. But with that being said, it presents a very good buying opportunity. And I do see that, coming to an end shortly. One thing I've said in other videos, guys, is I do see this kind of when that rotation does happen. And if it happens, I think a lot of the weaker stocks are going to remain really weak. When I say, there's going to be a shift, I think a lot of the really good stocks, like, if Paysafe wasn't a SPAC, I don't think it would get beat down like this. If it was just a normal, company and it wasn't part of that SPAC, I don't think it would have happened like that. But with that being said, a lot of those SPACs that have this much revenue and no earnings, I don't think that they're going to come out of it as strong as the companies that actually do have some solid fundamentals. Because you have to remember, guys, fundamentals lag. They are not, synced up with the stock price and the company at all times. But with that being said, guys, let's jump into the earnings report and kind of give you an idea of what happened to Paysafe over the last couple of days. So Paysafe, they beat on revenue, but their revenue outlook is soft. That's the title of the article. Guys, I actually thought the revenue, the earnings report was not that bad. Obviously, it wasn't amazing. But one thing I will say, guys, is we didn't invest, or at least I didn't invest in Paysafe for the revenue growth. The revenue growth on Paysafe was guided at about 10%, even as clear back as early 2021. But they did show a deceleration in their outlook and their guidance for Q3. But as you can see here, guys, they had a positive net income for Q2 of 6.6 million, which is nice to see. Revenue was 3.84 million, which was 12.7% growth year over year. So nice revenue growth there. But this was the issue here. The company expects Q3 revenue in the range of 360 million to 375 million versus a consensus of 389 million, and an adjusted EBITDA in the range of 95 to 110 million. So what they're pretty much, saying is that they're showing deceleration towards the end of the year. Now, it's not by a lot, but when they came out with guidance in the beginning of the year, it was it was higher than what they're guiding for now. So, guys, they showed about 13% year over year growth on Q2. They said that they're going to grow about 10% year over year. That is not significant growth by any means, guys. There's companies out there growing. PayPal on a much bigger scale grows at like 20% year over year on their revenue. I'm pretty sure it's around that area. But guys, I didn't invest in the company for revenue growth by any means. Do I think that they're going to outgrow 10% in the next couple of years? Yes, I do think that revenue growth percentage will go up. But the reason I invested in the company was because the igaming. So guys, this right here is one of their biggest, potentials for their different segments. They've got the 3 different segments. Integrated payment processing makes up like 75% of their revenue. Guys, we just went through a pandemic, right? We went through, we're still in this pandemic and this time where SPACs are getting unjustly beat down. This is a stock that I plan on holding for the next 2 to 5 years. And if you look here in full year 2020, iGaming was barely 1% of their overall revenue. They process 100% of the licensed poker, casino, sports betting, iLottery volume in Canada. And the United States is set to explode. The industry for iGaming and online gambling is growing rapidly in the United States. Guys, during the pandemic, there was not really any sports. No stadiums were jam-packed. People weren't out there, tailgating. And that is going to come, right? Eventually, everything's going to get back to where sports are jam-packed, and 7 additional states that have legalization coming will get legalized. Guys, they process payments for DraftKings, Twitch, Golden Nugget. They expanded their partnership with WinBet. This is the area that excites me and the reason why I invested in the stock. The revenue growth, sure, 10%, whatever, it's not that bad, but the free cash flow is really what excites me, guys, because that free cash flow conversion of like 50% or 48% on their adjusted EBITDA is really nice, guys. I see Paysafe turning into a free cash flow machine over the course of the next 5 years, and that's where I see the value. As of right now, they're barely, trading at 20 times free cash flow. That's really not that much. I mean, that's a pretty standard multiple, guys. So I think there's a lot of upside from these current levels at $8.24. Last thing here, guys, is the cryptocurrency. But here's some of those partnerships with the igaming. Like I said, FoxBet. They've done a lot there. The management is so good with making deals, acquisitions, and partnerships. I mean, they've already made 2 acquisitions here in 2021. The revenue growth is not bad organically, but I think they're going to do a lot to grow inorganically by making partnerships and acquisitions, because they've got a management team that has the expertise to go out there and continue to make acquisitions, continue to expand and grow inorganically. And I think that they will continue to close deals throughout the rest of the year, whether it's partnerships or whatever. But last thing, guys, is the cryptocurrency. Digital goods is live in 22 countries. With Microsoft enabling online cash transactions on Xbox, Skrill live with Riot Games, so League of Legends, but they even had a collaboration with Wix, guys. So they're doing a lot to grow, is what I'm getting at here. And the 2 segments of iGaming and cryptocurrency, right there. Digital wallet live on 30 crypto exchanges, 8 live for processing, and less than 80 or greater than 80 markets added. 22 new cryptos available for trading since Q1. Now they have 37 total. That's what's exciting, guys. They've got, big blue chip, big partnerships with massive companies, leaders of their industries. The iGaming's growing, which will in turn generate more revenue, the digital goods, the cryptocurrency, and they will convert a large percentage of that as free cash flow. And that's what I'm looking for. As you guys can see, this is the last thing we're going to look at before we jump into the intrinsic value and I give you the Paysafe stock price prediction. Guys, you can see here over the last, 3.5 years, they've lost money every year. Right now in their trailing 12 months, they're negative about $100 million on their net income. But if you look at their free cash flow, and anybody that, is not familiar with how you gather free cash flow, you go to the cash flow statement. You take your cash from operations minus your capital expenditures. Guys, look at the free cash flow growth from 2019 to their trailing 12 months. As you can see here, I mean, in 2019, they had 289 million in cash from operations minus about 10 million in capital expenditures. That puts you right at like 279 million. 409 minus 5.4, that puts you at 405. And then in their trailing 12 months, they've done about 310 million. So out of those 3 years, they've done about $1 billion in free cash flow. And if you take a 3-year average, you're, 320 something million dollars. So you times that by 20, guys, and it's literally trading at less than 20 times free cash flow, like I was saying, which is really good. Most of these growth stocks and SPACs we invest in are trading at like 90 times free cash flow. So again, this is why I invested into them, guys. Long term, the free cash flow will continue to grow, and that's where you get your value. This is a simplified discounted free cash flow sheet. As you can see here, guys, I put the all the data in: the ticker, share price, diluted outstanding shares, most recent revenue, most recent net income, and most recent free cash flow in their trailing 12 months. Now, guys, I like this sheet because you can use different assumptions. I put in a growth rate for the next 5 years right here at 18%, but I'm going to drop it down to 13%. That's pretty much what they're about doing. As far as the net income margin, it's about 13% as well. And their cash flow margin right now is about 21%. So doing exactly what they're doing right now, I get an intrinsic value per share at about $11.90, call it 12 bucks right now today. So you've already got 43.8% upside from current levels at like $8.30. Now, I actually think once we get out of the SPAC, beat down and you start seeing risk on and growth stocks start getting some love again and we start getting back into a sustained uptrend on the low, small cap, low market cap stocks, it will do much better than that. Now, if you even change these numbers a little bit, guys, like if we even jump in here and we say they're going to do a better free cash flow margin of 21, and let's just say they're going to do 30% free cash flow margin, that puts your share price at, 16.9 or $16.90. You, put the growth rate over the next 5 years at 20%. It jumps it up to 22. So there's a lot of assumptions you have to make, guys. I would like to be more conservative. Like I said, you put it at $11, flat just to be even more conservative. And the stock is looking very fair value as of today. I think there's a lot of upside from current levels. My previous stock price prediction for Paysafe was a little bit higher than, the $11 for the end of 2021. I'm still putting it up there around that $14 to $16 by the end of 2021. And I think in the next 3 to 5 years, it can easily be a $40 stock. It's just going to take a little time. Again, what do you think is going to happen when, igaming's back on, people are betting online, sports are back? They're going to do very well, guys. But let's take a look at the chart. The chart's disgusting. This is one of the worst looking charts, out there right now, guys. That's the same with Lightning E-Motors and a lot of the other, SPACs that we look at. But as you can see, it ran up, and this was the SPAC craze. This is when everything was running to all-time highs back in December and January. It got up there right around $20, $19.57, and has been selling off ever since. It has done nothing but make lower lows and lower highs since the end of January, guys. What's really disheartening, guys, is right back here, in April, it tried to find its bottom, right? It tried to hold this inflection point right here, from about $12.50 to $13. Tried to test it again. It actually caught a little reaction right there at the end of April, tried to test it again, just couldn't hold it, guys, and then tried to back test it and back tested it as resistance. So tried to confirm it as support, gap below it, and has tested it 4 times to confirm it as a major resistance level. Now, as you can see here, it is respecting the heart line as of today. But guys, one thing I wanted to show you, just to give you an idea of how poorly these stocks are performing. Right here, you had bullish divergence at a critical inflection point at that $10 NAV price level. When you get a big retracement of 100% of its value on a stock like that, creating, a first low, a second low with Class A bullish divergence on both oscillators, you should get some type of reaction run. Look at how poorly it played out, guys. You had a couple of green days and it just rolled over and bled back out. That is a huge sign of distribution, guys. When you see, that strong of deep bullish divergence in the oversold area, it's like a bad action magnet move. It runs up to the 50% mark, comes back down. Your price makes a 113, minimum on your extension to make a lower, low, and the oscillator makes a higher low. That's strong divergence, and you should get a much better reaction off that, but you just didn't. Same with the 50-day moving average, guys. It's just been cramming this thing. Every time it's even gotten close, it just pushes it right down. So, do I think this is the bottom? I don't know, because it could absolutely break that heart line, come down here and test $5. Now, if it does that, I will absolutely add more. I'm not going to add any as of right now because my cost is already down pretty close to where it's at right now. But in order for me to get confident in it to where I start buying a lot more at these current levels, is I need to see some type of accumulation. We want to start seeing higher highs, higher lows. We want to see a momentum shifting structure. It's already setting up right here for an inverse head and shoulders. I mean, this could be your left shoulder. This could be your head. It could come up here, back test this, $10 critical level as support. If it does that, guys, you could very well make hidden bullish divergence on the way out, like we've talked about before. And if you get that hidden bullish divergence on the way out, confirming that $10 price point as support, you could easily run to $12, $13 really quickly. Guys, I think that as soon as you get that accumulation, as soon as you get that momentum shift on these SPACs and growth stocks and small caps, you're going to start seeing some explosive runs. So if you already own it and you are at a cost basis that is not going to significantly cut your price down, like if you have a $16 cost basis, I would say average down, because you're at $8, it'll cut your cost in half. If you are like at like 11 or 9, I would say hold off. That's what I would do if it was my portfolio. If you're right around $8-9, I would just let it sit and let it ride, unless it drops down significantly to the $4 or $5 level, which it very well could. Like I said, it could come test the bottom of the channel. Now, it hasn't done that. Once it broke above the heart line, it hasn't, gotten back below it since, back here in May. Guys, you did have some pretty heavy selling volume right here on earnings. You are at a, one of your lowest levels of relative strength since, back here in May, and before that, at inception. Same type of thing with negative momentum, May and then inception. So I do think that we've got opportunity for it to turn around, but I think you're going to see some consolidation and continued, bleeding for the next couple of weeks. Now, you very well could get some moves, because one thing I will say, guys, this very well could be the bottom. If you take your, your last major low to your last discernible high, you just made a 1618 fib extension. That's the areas where major reversals happen. So you very well could. But again, your 200% and your 227 is right there at the bottom of the channel. So that's some confluence that you could absolutely see. Overall, guys, I love Paysafe for the long term. I love it at $8. They're going to be a cash flow machine, and I think this stock will do very well in the next 3 years. You just got to be patient. Depending where you're at, just watch it, keep your eye on it. And once you start seeing that momentum shifting structure, just like you see in the crypto charts for the last 4 weeks, then you're in the green. But until then, you're probably going to see some continued chop. But that's it for today, guys. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon if you want to be part of a beautiful family. Have a wonderful weekend. Peace.